China is the second biggest buyer of U.S. Treasuries after the U.S., and some say China's slowing the buying or outright selling U.S. Treasuries will affect U.S. markets and business confidence. As decision makers know, confidence is key. That's what makes the business world go round. So does strategic thinking. And with that in mind, we bring in an expert on that, the vice chairman of top advisory firm Lazard, in a Fox Business exclusive. Welcome back to the program, Gary Parr. Great to see you.
Deirdre, nice to be here again.
So I know you travel all over the world. You have spent a lot of time recently in China.
Yes.
How do you see their growing pains and how it affects business globally?
It is, as you said, second largest economy in the world. It has second-order consequences, though. I think a lot of the markets overreacted in the short term to what's going on in China. But substantively longer term, how they grow, how they invest, how they move their capital around really does matter. But curiously, I think in the short term, exaggerated. I don't think they'll have much of an effect on interest rates here in the U.S., but they will have an effect on exporters and on how companies think about their growth opportunities to ship. Is
this changing the advice that you give? Because this is your role, to help companies think more clearly, to find solutions. So is this shifting the kind of strategy that you employ for your clients?
It does in a sense, because particularly in the last 3 months, we've seen China and other aspects in the marketplace creating volatility. Volatility affects how a CEO will think about their strategy, not so much in the short term. So 1 month of volatility, even 3 months, doesn't affect, but as it begins to sink in, volatility, as the last financial crisis, really slowed down mergers and acquisitions because people were afraid of what will be around the corner, what's coming next, and mergers obviously are big decisions.
So you did have some clients say, okay, you know what, I know we talked about putting together this deal, I can't do it right now.
It's not yet in this time, but it's what we watch out for, and it's what we talk about. We obviously try to help our clients manage risk, not take undue risk, and be sure to consider. So there's a reasonable chance that some number of transactions where people will slow down and make sure, particularly now at the end of summer, the U.S. is back from Labor Day, and to see, was the volatility unusual for August, and now we'll go back to stability or not.
So, Gary, what are you hearing from your clients? I mean, what is their level of concern? And maybe they're not concerned at all, but given past times of crisis or past times of volatility, are they more anxious than they were a few years ago, or is it status quo?
I'd say the issues always change, so the concerns change. So one thing that I'd say in the not a big deal, interest rates. Whether the Fed raises interest rates or not really doesn't affect merger activity. 25 basis points a quarter really does not matter. The second-order consequences of interest rates going up at the Fed causes the stock market go down a lot, then it matters. But in and of itself, it's not that big a deal.
Let me ask you about taxes, because some of the investors we have been speaking with say this matters a lot, especially with merger and acquisition ideas that they may or may not have. Billionaire hedge fund manager Bill Ackman told us this.
It is crazy, the corporate tax policies we have now that basically encourage U.S. companies to sell themselves to foreign companies. Effectively, what's going on now, because tax inversions are discouraged, is foreign companies are buying U.S. companies. We've got to fix problems like that. We have to level the global, our competitiveness from a corporate tax point of view. Otherwise, the consequences are very draconian.
So do you see, I'm sure taxes always play a role in what you do, especially cross-border, but do you feel like they're more cumbersome now, or potentially more cumbersome than they were in the past?
It's been a change over some time, and yes, the issue is the U.S. has one of the highest marginal tax rates on corporations in the world. And so that creates an opportunity for companies outside the U.S. to acquire and, through a variety of mechanisms, reduce the tax rate of the U.S. part of the business. So yes, having the highest tax rate is not a good place to be from an overall policy matter.
Okay, from an overall policy matter. As far as the bigger picture for banks, because this is part of your area of specialty, is there innovation left in the banking sector? Oh,
there's so much innovation with the technology side, and I know you spend a lot of time on this and talking to people. It's fascinating to see how the change is taking place, how it affects consumers, what they will be able to do with technology, particularly at the retail level. Robo-advisors, having a financial advisor where you've got technology playing an important part, or just what you do with mobile applications. It's changing banking. Interestingly, so much of regulation has been dealing with the last crisis, capital, risk, and things like that. I think the next area of actual risk and or opportunity is technology, cybersecurity, and other things.
Jamie Dimon, CEO of JP Morgan Chase, actually said, look out, Wall Street, Silicon Valley is coming for you. Did that resonate with you?
Absolutely. It is one of the biggest risks and opportunities. Again, it's sort of old news to talk about Dodd-Frank and all the regulation. Not that it was bad, it was a good thing to create more stability in the banks. But once you stabilize the financial side, they are very vulnerable, or they can be winners if they get technology right.
So, Gary, for somebody who's 21 years old who comes to you and says, you're very successful, I can either be a programmer or I can aim towards a banking career, what do you tell that young person?
I would say, it's interesting. So big banks is not the same opportunity as, say, when I started my career. They're going through a dramatic change that reduces growth opportunities and some of the business sectors. Having said that, finance is a very attractive area, a category that you know well, alternative asset managers. Another is focusing on specialty areas. Even a firm like Lazard, where you're focused on giving financial advice, is a high growth area and very interesting. So it's more finding your segment. Even being a technology person within a bank could be an interesting place to be because the banks need it.
Okay, well, as always, if you have a specialty, specialize, do it well. Gary Parr, thank you so much.
Thanks, Deirdre.
Vice Chairman of Lazard.